Hi, my name's Danny Brown, and I'm the CEO of Myriad Real Estate Group, and this is going to be our June market update. All right, so there's a lot of headwinds in front of us, and there are a lot of clickbaity articles out there about the housing market crashing. So there's these same people that seem to come out of the woodwork every time something's coming up since the collapse of the housing market in 2007, 2008. So every couple of years, they start talking about why the housing market is going to collapse because of whether it's interest rates, because of the silver tsunami, which used to be a thing where everybody was going to retire all at the same time and they were going to flood the market with their homes for sale. Because of the pandemic, everybody was going to panic sell. None of these things have ever come to fruition, and property values have been on the uptrend in terms of values, and even more so during the pandemic. So where are we at today? Well, the Fed has continued to raise interest rates because they're trying to put downward pressure on demand for pretty much everything, making the cost of goods, just the cost of everything, more expensive. So with downward pressure on demand, that gives supply the opportunity to catch up. We are seeing that in the housing market. So what is taking place in the housing market is exactly what we want to have happen. So interest rates and mortgages this year have gone up faster than anyone predicted, granted. So right now we're in probably the mid to high fives as an interest rate. And so because those rates are as high as they are, that is impacting people's affordability along with the higher prices that we've seen over the last 2 years. And so you've got higher interest rates, higher prices, and so less people can afford to buy homes, which is putting downward pressure on that demand, so less people are buying homes. What that is doing to inventory is as homes are coming to market, they're taking longer to sell, so the days on market in all price ranges is increasing, and then more homes are coming to market behind them. So 6 months ago, last 2 years, homes were selling so fast that inventory was not catching up, it was going down. And so now homes are taking longer to sell. So if you imagine a home that gets listed today, if it takes 2 or 3 weeks to sell, more homes are getting listed behind it, and that inventory is starting to gradually increase. So right now our inventory is up 85% in Maricopa County versus this time last year, which is awesome. However, the inventory in Maricopa County is still only 8,000 homes. So for us to be in a balanced market, we need to have 3 to 6 months worth of inventory to balance between buyers and sellers. The closer we are to 6 months worth of inventory, the better it is for buyers and the better it is for the overall housing market. Now, the thing to pay attention to as we continue to move forward is as supply or inventory increases and as demand comes down, what's going to happen when those two lines get closer together? Is the demand going to continue to drop and is inventory going to continue to increase? If that happens, then we will, of course, eventually enter into a buyer's market. And if we enter into a buyer's market, we will actually see pricing come down in homes. That hasn't happened yet. And I, for one, am in the camp that I don't think that it will happen. And if it does, I think it will be a very small percentage overall. I do not think that we are headed for any sort of collapse or crash in values. If there is a pullback, it will be more of maybe 5% pullback, maybe 10, but nothing like we saw in the 2007-2008 crash. If the trend that we're on continue, we will be in a buyer's market or a slight buyer's market come August. Now, the last 2 weeks in Maricopa County, inventory has dropped. So the trend line was heading up and then it headed down. So it's really hard to predict if those trend lines are going to continue, but if what was taking place over the last, several months continues, we could potentially be in more of a buyer's market come August. I don't think that that is going to happen. I think that we are going to find some middle ground because markets are constantly seeking balance. So kind of Econ 101 is any market that you're in is seeking balance between the buyers and the sellers. So I think that we will start to enter that realm, and we'll find that balance relatively soon. The last time that we were in a true balanced market between buyers and sellers was 2014. Since 2014, we have pretty much been in what's considered more of a seller's market. Didn't necessarily feel like as crazy as it was the last 2 years, where you put a sign in the front yard, you get 20 offers, and you sell within a couple of hours or a couple of days. But it was still more of a seller's market. Honestly, the last time we were really in a buyer's market was in the post few years after the housing market collapsed, because we had more than 6 months worth of inventory in Greater Phoenix. The biggest thing to recognize when it comes to housing is that people don't panic sell because values are just changing. This isn't the stock market. People have to live somewhere, and we're not going to see a flood of inventory hit the market because people are nervous or worried, because again, they have to live somewhere. And you're not going to, just because there's a slight pullback in the market, if you've owned a home for the last couple of years, you have a ton of equity in the property. And even if we do transition into a slight buyer's market, you're not going to start to see a lot of people be like, oh man, I need to sell my house, because they're going to have to go somewhere anyway. And so people are going to remain in their home. And in 2007, 2008, that was a credit crisis that was caused there was way too many homes that were built with not enough people to live in them. So right now we're in the complete opposite. There's not enough homes and there's too many people. And then we had a run up in unemployment, which we're not seeing. The unemployment rate right now for the United States is at 3.6%. So we're basically at pre-pandemic levels. I think the last number I looked at least for Greater Phoenix, was we were at like 98% of all the jobs that were lost have been regained since then. And right now there are 2 jobs available for every 1 person who's unemployed. So as long as we don't have a credit crisis, which I don't think we will, and as long as we don't have a massive run up in the unemployment numbers, I don't think that we will see any sort of flood of homes to the housing market, which would cause the housing market to crash. So this all really comes down to some very simple basics of supply versus demand. So as long as supply is below the levels of demand, we will remain in a seller's market. The closer those 2 lines are together, it's just going to feel like a run-of-the-mill market. If supply starts to outpace demand, then we will enter into a slight buyer's market. And so that's kind of where we're at. If you are a seller entering into this market, it is still a wonderful time to sell. There's still only 8,000 homes on the market. It is still a seller's market. However, less buyers out there. So the overall number of transactions that are taking place in Maricopa County has dropped 16%. So that means less volume is taking place. And so it's taking longer to sell. Buyers are having more options, so they're being choosier in what they want. Sellers are having to do repairs, offer credits in order to sell their house, and you're seeing a lot more price reductions. So that's some of the clickbait articles that you're seeing out there, is that everyone's dropping their prices. Well, if you are, everything is looking at what has taken place in the past. And so if your neighbor down the street sold 3, 4, 5 months ago at this price, and you're reading all the headlines on how this is a crazy housing market, homes are selling, you're going to list way above them. Well, when the markets shift, sellers are the last ones to know about it. And so they're going to list high, and then they have to start doing those price drops. The thing to pay attention to is, what is the final sales price? Is the sales price below the previous home's sales price. If that happens, then that shows that there's properties that are losing value potentially. That hasn't happened. People are riding this wave of increased prices and they're continuing to list higher and higher, and they get to the point where they list too high and they need to start doing those price drops to bring them back down. Now there's also more competition for listings. So when you have more competition, that means you have to be a little bit more aggressive in your pricing. I will bet you if we look from June through the end of the year, the rate of appreciation in Greater Phoenix is probably going to be somewhere closer to that 6 to 8% range rather than the 30% plus range that we've been seeing. Phoenix, actually, for the first time in 3 years, is now in second place for the fastest appreciating market in the country. We just dropped behind Tampa Bay, which I am in favor of. Our home values were appreciating way too fast, so we definitely want to be lower on that list, and that trend is probably going to continue. So if you are selling, be prepared for longer days on market. Be prepared to actually do some work to get your home ready to sell. Curb appeal matters, having it clean matters, fresh paint, flooring, those types of things are now coming back into vogue. Like, those are important to do. You want to put your best foot forward when you're listing your house. If you're a buyer, I've got great news for you. It's much easier to buy a house. There are less multiple offer situations taking place. We are having luck with getting sellers to do credits in lieu of repairs. We're getting them to do repairs. We're getting them to cover closing costs, contribute towards closing costs. This market right now feels much calmer, feels much closer to a balanced, more normal market than it has in a very, very long time. So while rates are higher, the ease of buying a home is a lot easier. So if you're looking at homes that you like, but you don't like the price, try to negotiate. A tactic that I'm a big fan of in a high rate environment is asking the seller to cover your closing costs rather than a lower price, and taking that closing cost credit to buy your rate down. That's going to affect your monthly payment way more than getting the home to come down in price, and it's going to be better for the seller too, because it takes a lot less money to lower your rate when you buy the rate down than it does to drop the overall purchase price of the home. So just a couple things to think of. But if you're a seller, it's getting a little bit harder to sell a home. If you're a buyer, it's getting a little bit easier to buy a home. If you have any questions for me on the state of the housing market, if you're looking to sell or looking to buy, definitely let us know. Don't forget to give us a like and subscribe. And again, I'm Danny Brown with Myriad Real Estate Group.